Airlines in India have decided to pass on the rising jet fuel costs to travelers over the past few days, leading to a sharp rise in airfares. Prices are also expected to escalate as demand increases. Geopolitical risks related to Russia's invasion of Ukraine have contributed to higher crude oil prices, with the benchmark Brent reaching almost $120 a barrel last week, the highest in more than 8 years. Aviation turbine fuel, which is derived from crude oil, has surged 63% over the past year to a record high. On March 1st, jet fuel price shot to 96,478 rupees per kiloliter. The rate is higher than the previous record of 71,028 rupees per kiloliter reached in August 2008 when international crude oil prices touched $147 per barrel. Fuel accounts for 35 to 40% of an airline's operating costs. The government has set a minimum and maximum fares for domestic flights, and these are applicable for up to a fortnight. For bookings beyond 15 days, airlines are free to set their own fares. According to data provided by travel portal Ixigo, for tickets purchased about 20 days in advance, the average one-way fares on some of the top domestic routes have increased by up to 30% in the first week of March 2022 from a month ago. A Delhi to Mumbai ticket, which cost 4,055 rupees, is being sold for around 5,119 rupees, an increase of 26%. Similarly, ticket prices on the Delhi to Bengaluru route are up 27% and Kolkata to Delhi route are up almost 30%. Simran Singh Tiwana, Chief Executive of Regional Airline Star Air, told Business Standard that at current levels, airlines have no option but to pass on the higher cost of fuel to customers. While short-term outlook for the industry is still positive, pricing on regional routes comes with its own challenges.
So the fares have gone up. So there is no way an airline can absorb the fuel prices where they are now and how they are shooting up. So some part of it, yes, will have to be passed to the customer. However, the market that we operate in, there's always a decision that we have to make because some of these routes need that stimulus of a good pricing. There are some discussions that all the airlines jointly are trying to have with Ministry of Civil Aviation and Ministry of Finance to see and find out a solution for this. But I think this is something that we will all have to bear with. Yes, there is pent-up demand, and on the regional routes, because the connections are very limited. So yes, we will be able to kind of sail through this time. And pent-up demand is more on a lot of leisure routes. However, regional routes are not usually leisure routes. So the travel is more related to business and family travel. Demand that has always been there. However, tapping it during the pandemic was very difficult. So we are all expecting that we will continue to get the loads that we are getting. As far as our pre-pandemic levels are concerned, so we are very close to it. And this fuel price will definitely hurt or probably lengthen the curve to get back to where we want to get back. But we are very close.
Anirban Sengupta of travel management company 2Hub told Business Standard that higher airfares will not dent the recovery as there is a strong pent-up demand. Business travel remains a weak spot, recovering only 50% of pre-pandemic levels.
In any case, we were anticipating price rise, not only in aviation, but in the overall tourism sector. See, firstly, there is a lot of pent-up demand. And with things easing off, people are beginning to travel. And airlines are running at a 70% capacity in any case. So there will be, a shortage of supply, which would have taken prices up. But now, definitely because crude prices have gone up, that has been passed on to the airfares. I mean, it is not worrisome. There is a lot of pent-up demand. People will be paying higher prices, but they'll still travel. So I don't see the demand coming down because of that. While corporates are easing travel restrictions, but I don't see business travel coming up to the pre-COVID numbers in a hurry. But if you ask me, I don't see it coming back in the next two years at least. Right now, the demand is primarily leisure travelers.
India's daily air passenger numbers are still 25% below the pre-COVID peak. Domestic air travel saw an uptick in February after a 42% month-on-month decline in January due to Omicron lockdowns. Barring the Omicron disruption, air travel has been on a recovery path, and in the coming days, this will be supported by leisure travel. Ixigo is seeing a 35 to 40% increase in travel search queries in March to popular leisure destinations like Goa, Srinagar, and Port Blair, despite rising airfares. However, the ability of airlines to pass on rising fuel costs will diminish if the recovery led by pent-up demand loses momentum, putting pressure on the already stressed airline balance sheets.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.